You purchased a property, you remodeled it, and now it's time to refinance. What does that process look like? Before the DSCR lender, we went to 5 different banks and got turned away by 5 different banks. So as you guys will notice, we are not in the Lawton office. Antonio and I are on a trip right now. No, they can't see you. They can't see you. Normally, I'd be recording this in the office, but this week we're traveling. You guys are gonna see why we're traveling. I'll post some videos, so if you have not subscribed, subscribe and you'll see exactly why we're down here in South Florida. We're checking out some really cool stuff and I think you guys will like it. So again, please like and subscribe so you can see what I'm talking about. Hey guys, my name is Alex Zaslowski, and in today's video, I will be breaking down DSCR loans and how they have allowed us to scale such a massive portfolio in under 3 years without tax returns or personal income. If you've done any research on the BRRRR method, as you know, it's buy, remodel, rent, refinance, repeat. I notice a lot of real estate investors, when it comes to the refinance part, will say something along the lines of, you bring the property to the bank and the bank gives you a loan for 75% of the property's market value. After my partner and I bought our first property and did like they said and brought the property to the bank, that is where we ran into problems. Banks, traditional banks, community banks, and most banks you would go to, they care about the borrower, not the property. So my partner and I, having no tax returns or income statements because we're fresh out of college, went into the bank and they turned us away. On top of it, because we'd owned the property for less than 3 months, they had what is called a seasoning period, and therefore we could not refinance and pull our cash out of the deal. The seasoning period means how long does the bank or lender want you to have owned the property before you can refinance and pull cash out of the deal. Most banks are gonna have a seasoning period of 6 months to a year, and if you're doing the BRRRR method, having your cash tied up in a deal for that long does not work. Here we were with a property that was fully remodeled and ready to go, and no banks were willing to lend on it. We didn't really know what to do until we called the biggest investor in our market, and he connected us with his DSCR lender. His DSCR lender was how he was able to scale to over 2,000 houses in under a decade, because she had no seasoning period. She had no limit to how many outstanding loans he can have. A lot of local banks, they'll cut you off. They'll only extend a certain amount of credit towards you if you have a line of credit. They'll only allow you to have a certain number of mortgages with them. Whereas DSCR lenders, they're brokers. They're selling off the loans to a bunch of different lenders and companies, so you will not run into a ceiling with how many loans. So basically, the biggest investor on our market, his secret to scaling to so many doors, his quote secret that a lot of real estate gurus will gatekeep, is a DSCR lender. So in today's video, I'll be breaking down the loan products that our DSCR lender has, which ones we tend to use, the pros and cons of different loan products, and what refinancing a property with a DSCR lender would look like for you. So what is a DSCR lender? A DSCR lender, first of all, DSCR stands for debt service coverage ratio. What this means is that the loan is based on the asset's ability to cover debt or the property's ability to cover debt. Debt service coverage ratio means that the income the property brings in must cover the monthly debt payment. So most DSCR lenders will have a debt service coverage ratio of 1.2. Ours debt service coverage ratio is 1, basically meaning if the monthly mortgage is $900 a month, the rent has to at least be $900 a month. That is the main thing that the DSCR lender is using to qualify you for the loan. Here are the requirements. Credit score above a 680, DSCR ratio, got to be above a 1 or 1.2 depending on your DSCR lender. Then the third thing is the property's value. Most of them have a loan minimum of $50,000, so the property's value needs to be at least $75,000. So if you take 75% of $75,000, that's $50,000. DSCR lenders are also commission-based, meaning they will work faster and harder than a traditional bank. In our experience, when we were working with a bank, they moved at bank hours and they did not have any hustle or really go get the loan done. DSCR lenders will fight tooth and nail to get a deal closed because they get their commission. So I remember when I called Patrick, who's the investor, when I called his DSCR lender, on call 1, it didn't matter that me and Antonio, he just left, only had one property. She immediately was already trying to figure out how can I get these guys to refinance and get the loan going. She works with investors with thousands of doors and she works with investors like us, but because she's commission-based and a hustler, because look, if you're a DSCR lender, you don't have hustle, you are not making money. Compared to the conversations we had with banks, when we got on the phone with our DSCR lender, she was ready to go. She was ready to go. And what you'll find with community banks, there's this concept called relationship banking, which is basically Our lending and quality of service to you will be contingent to our relationship with you, that you have to spend years building and you have to act a certain way. You have to perform a certain way for them in order to get that relationship. DSCR lenders, they care about volume, they care about you scaling your portfolio, and they care about their commission. So they're gonna move differently than a traditional bank. Before the DSCR lender, we went to 5 different banks and got turned away by 5 different banks. The main reason we were getting turned away by these local banks was, like I said earlier, tax returns and personal income had nothing to do with the quality of the properties or the rental income of the properties. And a lot of them too, we actually got turned away because a bank was worried about our, how you put it, relationship to the community, because we were newer landlords, and I'm from Texas, my partner's from New York, and to them, they saw that as a problem. So like weird stuff like that, you'll run into that with banks. DSCR lenders, hey, do you got a 680 credit score? Do you got a property that has good rental income? And we're good to go. They're getting their commission. They're getting you loans. So that's what a DSCR lender is. Commission-based debt service coverage ratio. 2 main things. How do you find a DSCR lender? One of the best ways, of course, one of the best ways to find anybody is by word of mouth and referrals. Join your local Facebook investment group. Ask around who do people recommend for DSCR lenders. A lot of DSCR lenders give kickbacks to their investors if they recommend them to someone. So there will be hopefully eager investors to share their DSCR lender. Your next area is Reddit. Reddit, you can find a ton of them. And any social media platform, you can find them, LinkedIn or Google as well. DSCR lenders are like realtors. There are a lot of them. You will probably have to go through a few of them to find the one that works for you. For us, we only had to go through 2 really before we found ours, because basically we had the one that Patrick referred us to that was great. We tried a few others just to keep shopping around, get better rates, and we always came back to Patrick's DSCR lender. And what we found is you'll pay roughly the same for whatever DSCR lender, CV3 versus just any of the other ones. You'll roughly pay the same, but the quality and service will be vastly different. For us, now, we're willing to pay a little bit more to have a quicker DSCR lender that can overcome more obstacles for us and be a bit more proactive on fighting underwriting, because that saves us time and it gets our cash out of deals quicker. Our key to scaling is speed. We need to get our money in and out of deals quicker, and a slow DSCR lender just doesn't work. We'll pay more to have a quicker DSCR lender. Other great things about DSCR lenders, seasoning periods. Banks, they got a seasoning period. You got to own it for at least a year. The opportunity to your money being tied up in a deal for a year, the number of deals you could have done by recycling that capital makes it painful to even think about. Yeah, you could have recycled the same 100 grand into 4 properties in the span of 12 months. With a DSCR lender, with no seasoning, year 100 grand can be recycled 4 times by the end of the year. That is why we are okay with paying potentially higher interest rates than banks, because 4 houses and a difference of 1% to 1.2% on the interest rate, the answer is so obvious. Be able to recycle our capital faster made it so where even if a bank is a little bit cheaper for the closing costs and fees plus the interest rate, it's just the fact that we cannot pull our cash out until we've owned the property for 12 months just makes it not worth it. What are the requirements for the no seasoning loans? Got to be worth over $100,000. It used to be $125,000 of our DSCR lender, but now, as long as it's worth over $100,000, we get no seasoning loans, and you have to do a full remodel. That was something we learned the hard way. We bought a lot of properties and we would not do full remodels, thinking that we were we're saving money. Whereas in reality, if you don't do a full remodel, you're not gonna get the appraisal you want, and you are gonna have to deal with at least a 3-month seasoning period. So what we found, a little bit counterintuitively, by spending more on our properties, we're able to get our cash out quicker and we're pulling out more cash. And so the right thing to do is to always do a full remodel, even if it doesn't need a full remodel, because for our lender, that's what she kind of coached us up on. She coached us up on, we'd send her the properties she initially, the first few ones she refied, she's like, look, I'm gonna get this through, we're gonna get the refinance, you're probably not gonna be that happy with the appraisal, and we're gonna have to wait longer. And then she started sending us pictures on what all of our houses should look like. So she coached us up on how nice we should be doing remodels, and she really showed us that always doing a complete remodel will make getting our cash out quicker, more guaranteed, and easier. So now we always do full remodels, and we really have a lot to owe to her because she sent us some pictures of what they should look like and like little tricks for the appraiser. So stuff like glass shower doors, always doing the kitchen in granite or quartz, always doing new cabinets. Big emphasis on kitchens and bathrooms because that's where you get a lot of the points of the appraiser. And yeah, our DSCR lender really just coached us up on how our remodel should be looking in order to, one, have no seasoning period, and two, always win on the appraisal. A little bit all over the place, but the next thing for DSCR loans, what does the process look like? You purchased a property, you remodeled it, and now it's time to refinance. What does that process look like? The first thing your DSCR loan will probably ask you for, obviously, property address, purchase price, remodel scope of work. And then they will ask for all closing documents, the HUD, the settlement statement, anything the title company gave you at close, basically, get that over to your DSCR lender. Keeping all that stuff organized will make refinancing a lot easier, and what you'll find when you are doing a lot of refinances, the more organized you are with keeping all your closing docs, scope of work, receipts, the easier every refinance will be, and the less back and forth and headache and friction every refinance will be. So now we have a process, we use Basecamp, and basically as soon as we close on a property, all those files go into the property's jacket. When it's time to refinance, we just pull that zip file and send it over to our DSCR lender. We don't really even have to ask her for what she's gonna need. Immediately when we start the refinance, we start dumping all those files over to her, and a good DSCR lender will have a processor and they'll request the documents needed from you. That's really what it'll be. A lot of times I'll give her a call before we start, just be like, hey, here's the property, we're wanting to refinance, and she'll talk about maybe the specific loan product she's going to use or any details that are significant. So that's why we always tell her what we bought it for, what we think it's worth, and what we did on the appraisal, because then that determines what loan product she does or what lender sometimes she goes to. I don't ask too much as long as we get the term sheet back and we like the closing costs and fees and we like the interest rate. So once you start sending all this stuff over to your DSCR lender, they will handle the fight with underwriting. Underwriting can vary in what they require from you. Sometimes they only need a signed lease to verify income. Sometimes they need to see bank statements, like the rent literally hitting your bank account. Sometimes they're gonna require backdating 3 months of your bank accounts. Sometimes they don't. Sometimes they require receipts on the scope of work. Sometimes they don't. But really a good DSCR lender will fight underwriting on all that for you, and they'll be really proactive in anticipating what underwriting will need, so they get that from you ahead of time so there's no surprises. I noticed with a bad DSCR lender, it's the week we're supposed to close, and then they're like, oh my gosh, underwriting came back and they need XYZ, whereas a good DSCR lender, they already anticipated that and they already requested those docs and they're already on top of it. That's why having a good DSCR lender, very important. But really what it would look like, a good DSCR lender can get the loan closed in under 2 weeks, depending on title. So the DSCR lender will open up title with the title company to process everything, and it'll really be a 2-week process. The things you might be waiting for would be if the appraiser is slow, if the title company is slow, or if underwriting is slow. But really it's maybe a week of submitting stuff back and forth and then little stuff from there. After you submit the initial docs they need, they'll schedule an appraiser. The appraiser will contact you or your property manager, depending on what you tell them. They'll schedule a date for the appraisal. Appraiser will go out there, and important on the lease, you just finished the remodel, you might not have a lease ready to go yet. That is something that you can hold off on until you have a signed lease from your property manager. What we do in that situation, if we just remodeled a place, we don't have a signed lease yet, as soon as our property manager gets a lease signed, I send it over to them, and I just hope they don't need to have that first month of rent and deposit. But if they do, that is the one, I make sure that is the one thing they're waiting for. I make sure they're waiting on nothing other than the lease and proof that the rental income is in there. I make sure title company's ready to go. Everything else is ready to go, but that one last thing to check the box so that we're not waiting for too long. But really the process with the DSCR lender is gonna be much easier than any loan you probably have ever gotten if you've gotten one, because again, they're not trying to get to know the borrower. They're trying to get to know the property. What's the property's value? What's the rental income? What's your credit score? That's it really. And then it's just a few little details to just kind of check boxes for who the borrower is, but most of the emphasis is on the property, not on you. So that's why you'll find it's going to be such an easier process and faster process than with a bank. With banks, I mean, we've had banks want to know every single asset and liability, credit card that we have, and want to know every bank account. Like they obsess over the borrower. So that's why it takes longer with banks and there's more headaches and it's more confusing. DSCR lenders, they want to get it closed quick, they want to make it convenient, and again, It's the property, not the borrower. Closing thoughts on DSCR loans. There is a Oklahoma investor, Cameron Burke. You can look up on YouTube, Cameron Burke, B-U-R-K-E. He talked about recently, he got cut off by his bank pretty much. He's either too big of a credit line or too many loans outstanding. He was around 10 million total. He had like 5 million with them, or 5 million at one bank, 5 million at another. But anyways, he did nothing wrong. He was on time with all of his payments, didn't default on anything. He was being a good borrower. And from my understanding, they pretty much cut him off. They were like, you're basically too big of a number on our balance sheet, therefore you're too risky. And from what I saw, it caused issues and they weren't wanting to give him more lending, something along the lines of that. Cameron, if you're seeing this and I'm wrong about this, just comment, describe the full situation. But from my understanding of it is, community banks, regardless of your performance being a good or bad borrower, you can run into problems in them, like again, back to the relationship banking, of you being too risky in their eyes, not based on you being good or bad paying on time. And that is why DSCR loans are so great, because first of all, they don't even show up on your credit. If someone pulls your credit, they will not see you have 1,000 outstanding loans. They're attached to the property, and if you put the property in an LLC, it's to that property's LLC, and there is no limit on the number of DSCR loans you can have. No limit. And if you're scaling really quickly to 1,000, 2,000 doors, you can't have a limit. Whereas you're trying to use a local community bank, even regional banks, they're gonna cap you eventually because you become too risky on their balance sheet. DSCR loans, they're selling off the loans for every single property to a bigger buyer, or I don't know the right terminology, comment if you know what I'm talking about. They're selling off the loans for every property to note buyers on Wall Street, something like that. If you know exactly who they're selling to, please comment below. But you will not run into a limit on the number of DSCR loans you can have outstanding. So every single loan is approved individually, tied to the property, not looking at your entire portfolio, schedule of real estate, your liabilities. So you will not be bottlenecked or hit a ceiling with DSCR loans. If you want to use our DSCR lender, click the link in my channel bio. If you need to find a DSCR lender, join your local Facebook groups. If you have any questions, please comment below. Otherwise, join our free school community, link on my Instagram, Alex Vislowski. And yeah, if there's anything else about DSCR loans you guys want to know about or I should talk about, please comment below. Other than that, subscribe and see you next time. Thanks.